to remember to do all the things I'm supposed to do.
You're pulling double duty.
I miss my Amy. I miss my Amy today, everybody. Thanks for joining us. We'll get going here in just a little while. But yeah, she handles all of these things so gracefully that when she's gone, we have to think about them. And when she's here, we don't. So
Right.
shout out to Amy Bohr for taking care of us all the time. But yeah. Yeah, so I mean, in a bank, I guess, an 11-year tenure is different than when you're other places within the industry a little bit.
Yeah. Well, and I used to, it used to be that I was always young for the role I was in. And so
We still are.
we'd go to these company functions and things, and I'd always make some sort of joke about it or make reference to it because you could tell some people were looking at me like, yeah, there's no way this guy is really in this job or knows what he's doing. And last company function that I went to with my wife, I started to make reference to being young for the role I'm in, and she goes, I don't think you need to make that reference anymore."
Oh
So
no,
yeah, she nicely told me I was getting old.
you're getting old. Well, you're still a young one in my eyes. Thanks everyone for joining us today. We're just going to go ahead and get started. We still have people filtering in here, but I think we'll go ahead and get started for those of you who are on. Any questions, anything that you have, please. We love this when it's interactive and people pop things into the chat as we're talking, or if there are questions that you want answered, we'll have Bryan try to answer those because he's no longer a young one in the industry.
We'll see.
But but yeah, we'll get going here. So today I'm Faith. For those of you I haven't met, I'm Faith Howard Mooney. I'm the SVP of Member Engagement here at the Mortgage Collaborative. And we were talking before, been here 5 years.
5 years yesterday.
Yeah,
So
5 years.
congrats.
Thank you, Bryan. Thank you, Bryan. It's a wonderful thing. It's a wonderful thing. And those of you who aren't part of our network, it's a fun place to be. So you should come and join us. And with me today, I have someone that I always love having you on because you're just like a genuine person that will always give me your opinion. And you've been involved a lot in like some local politics and things like that, which I think sometimes gives you a unique perspective on housing and communities and other things. So with me is Bryan Traylor. He is the SVP of Residential Lending at Centier Bank. Centier joined us in March of 2018, which, 6 years ago.
Yeah.
That's a little crazy when I think about that. But you have tenure of 11 years at a bank, and we were just talking about at some banks, that's not a lot.
But it is here. Like it's, I should say it's not here because I said I've worked here 11 years and I still feel like the new guy because we have such high retention rates. You know,
Yeah.
we we have so many people that have been here, 20, 30 years. The CEO of the bank just celebrated his 50th year with the bank. So
Oh,
yeah,
that's crazy. That's
it's amazing.
crazy.
And
Yeah.
he is without a doubt still running this place. I mean, he
Good for
he
him.
steers the ship, that's for sure.
Good for him. Good for
Yeah.
him. Well, let's get started in talking about some topics that have kind of been in the news a little bit. Some of them, I want to get your feedback. You are at a bank, and so in a bank that's been around for a while. And I'm sure, some of these things.
129 years.
Yeah.
Yeah.
And you've been there 11 of the 29. That's pretty good. So you have a good, strong sense of what the history is there. So one of the things that was in the news this week, and I guess maybe not like extremely surprising, given the environment that we're in, but the OCC is going to be taking a closer look at banks,
Yeah.
their lending specifically.
Right. And we are, we're regulated by the FDIC. And when I saw that story, I started reading a little bit into it. And I my assumption would be that the OCC has had a very similar stance on fair lending as FDIC for the last several years, and I was trying to figure out how they could look further into it, and and then discovering that they were talking about being more real time instead of a look back, as most exams are, more real time data coming in using AI, and I mean it's kind of scary.
It's kind of, I was kind of thinking the same thing. So it was the acting head of the OCC that came out with this. And more advanced was the part that kind of got my attention too, because I thought, how much further, how much deeper can you dig, right? I mean,
Yeah,
they dig pretty deep already into a lot of that. But one of the things that I noticed when I was reading it, of course, a lot of people in their recruiting and in finding their opportunities in their marketplace, if they're, in more of that, fair lending space, they're using tools that provide a lot of data for the markets that people are in. And I'm not sure if iEmergent's on here with us, but they provide tools that can help you dig into some of those
we
things.
we use iEmergent, and I will say without a doubt that is one of the best return on investments I have in all of my vendors. It's we were using a competing product, went to iEmergent, and it's amazing technology, but then also substantially cheaper than what we were paying elsewhere. So yeah, I'll give them a plug.
Very nice of you. I'm sure that Bernard and Laird will appreciate that much.
Yeah.
But I was thinking about them when I was reading this because it made me think that in order to like look into and dig into CRA more effectively, I wonder if they're going to begin using some of those same types of tools that are out there in the industry, because that would definitely allow them to be more non-historical and closer to
And drill
real
right
time.
down. I mean, it's amazing what you can do with that as far as drilling right down to the individual census tract and see who is and who is not doing business there. And I mean, it's really something. And yeah, I mean, you assume that this technology is available on our end. Sooner or later, the regulators are going to start using it to make sure we're doing what we're supposed to be doing. And you know, to a point, you welcome that because we're always. As I'm looking through a lot of the news, it seems like a lot of the issues that people are having with regulators is non-disclosure of different things, different issues. And we're the first one that when a regulator walks in our door, we hand them, here's issues we've had over the last year. So you
Mhm.
don't find these, they're just right here, and take a look, and here's what we did to address them.
Yeah,
And kind of, tell on yourself rather than let them find it.
yeah. Yeah, they're probably always, I mean, they're going to dig until they could probably find something on everyone always, right?
Sure.
It's just a matter of the degree that it is. It is still a people business and mistakes happen. Um,
Um,
every once in a while, I think it matters how you react to those and the fact that you're very upfront about that. I would have to think that that would make a positive difference
we
on
we do have a
experience with
really good relationship with our regulators. They appreciate we're not one to hide from something. We put it out there and we address it and show them how we've addressed it and make sure that it meets their criteria.
yeah. And if they're not having to look for it, it's like they may not do as much digging, I would have to think. Whereas if they find it themselves, maybe they're going to dig a little bit deeper and see what else they find
But
in
yeah,
there.
that iEmergent tool for this exact situation of making sure that your fair lending is appropriate and your CRA efforts are there. Um, that iEmergent, we're able to pinpoint down to those census tracts around our branches in the CRA markets during recruiting, and say, hey, we need to really focus on this market, and we're able to use that to it's much less of a shotgun approach anymore, and
Yeah.
now it's laser pointed. We know which loan officers are doing business in that market, and go after them.
You would have a more targeted marketing approach too, I would think, once you get into that
Yeah,
market, as far as, I mean, if you know what you're dealing with and you know what you're trying to gain from being in that market, it would help you
yeah.
with your marketing efforts, I would think as well. So shout out to iEmergent. Bernard is usually on here, but since he hasn't posted in the comments, I think we're probably missing him today. So he missed out.
He's probably helping somebody like me because that's what I do. I call Bernard. I'm like, I know this system can do this. Show me how. And he's like, all right, I'll show you how, and I'm going to record it so you can go back and watch it later when you have this question again.
They are pretty helpful people, that's for sure, and longtime partners of ours who have been just a great resource for us as well. Also in the news, it was HUD in the announcement that in 2023, so last year, took administrative actions against 70 or more than 70 FHA approved mortgage lenders during 2023. In the environment that we're in, um, is is that number more or less than what you would have thought it was?
Well, so I looked back and it was higher than the prior year, but then you go back another, and I think it was 2021, they had cited and fined 93. So, yeah, 70 wasn't that out of the
No.
ordinary. And then you look at the size of the fines and the company names, and quite honestly, I was shocked at how low the fines were.
Yeah,
Um, yeah, you're talking about $5,000 to $15,000 in most cases.
not
Um,
large ones.
yeah, there. I mean, it's some of, and I'm not saying anybody in the TMC organization, but I'm sure there are lenders out there that just factor that in as a cost of doing business.
I'm sure you're right. And it made me wonder when I was looking at this. So when we were in DC last year, last June,
Yeah,
and we were talking with them, one of the things that I remember talking about while we were there was liquidity.
yeah.
And so it made me wonder whether in the environment that we're in, whether some of their penalties faced were due to certifications not matching what their actual liquidity was. And then when it got dug into further, maybe that was a source of penalties versus like manufacturing process related
Yeah,
penalties.
yeah. I mean, it seemed like a lot of them were liquidity, and a lot of them were delayed reporting. And in some cases, they were delaying their reporting because they knew they didn't have the liquidity.
Yeah, exactly. That vicious circle
Yeah, yeah,
that comes around every once in a while. Yeah, I kind of thought that. I didn't think that that was too shocking either, given, kind of where the industry is at and kind of what's going on. But I imagine they post that out there almost as a warning.
I'm sure it's just a nice, friendly reminder. And looking at the at that story, it was amazing how there were a few of them that they highlighted, but that are no longer in business.
Yeah,
You know,
yeah.
one that was just shut down on Friday.
Mhm. Yeah. Yeah. So maybe not too shocking. And maybe that liquidity was a lot of it versus
Yeah.
versus a little of it. Yeah. Well, let's shift a little bit and talk about, I don't know how much of this business that you do in your world, but I think it's pretty much everywhere now. Business that has down payment assistance associated with it. I would have to think in almost every business that that has increased.
It definitely has. You have you know, different municipalities offering down payment assistance now that are trying to, revitalize their community. Like, for instance, we're pretty prominent in the Gary, Indiana market, and that city is in need of, you know, revitalization. And they do have a pretty nice down payment assistance program, but It looks like everybody's increasing the options out there and the opportunities for down payment assistance. Um, in Indiana, we actually recently had our Indiana housing. They shifted their down payment assistance from being forgivable to being life alone now. So
Oh, okay.
yeah, it's a little shift. So while the I think their effort was to make it uh, to be able to expand the scope of their market and be able to help more people. But we'll see. That's new this year and something we're dealing with, and it's something that a lot of the realtors out there aren't really aware of until they start going down the process, and then they've encouraged their client to look into this down payment assistance, saying and say over and over again forgivable, and then they come in and we're the bad guys to tell them, well, that's no longer forgivable.
Yeah.
Yeah.
There are a lot of programs out there. So the article that I had found in the news was Down Payment Resources, who is also they're a brand new partner in our network, just onboarded with us a couple of weeks ago. And it's only one of the things that they offer. But one of the things that they do offer is they have always maintained a list of all of the DPA programs all across the United States. And so 79 homebuyer assistance programs were added during the first quarter. There are 2,373 of them out there in the United States. It's like a huge number of them.
Yeah.
Nobody should have to come up with their own down payment, right? Well, for people that need to qualify, you definitely should be. Well, I would say anybody buying, you should be checking into what they are, because it's surprising what some of them are. And many
And how
of them
few people know they're out there.
are stackable. So you
Yeah.
can use more than one at a time in your financing. So if you know people that are looking, keep that in mind. 9% increase, not surprising with where the industry, I think, is at, and where the cost of housing is at, and where
Well,
affordability is at.
yeah, I mean, what we're at the least, or what is it, the lowest affordability rating in 30 years, something
Yeah,
like that, as an industry.
yeah.
Um, yeah, so the down payment assistance is great, and that's always a great help. But finding that affordable home to put that down payment assistance on is becoming the biggest challenge.
Challenge. Yeah. Yeah. One of the places too that they saw an increase in those programs is more programs available for manufactured housing and multifamily properties, which I think with the housing supply where it's at least
Yeah.
in my neck of the woods, we're seeing more multifamily opportunities crop up in places where there are some suburbs here that have very traditionally been only single family. You could
Yeah.
not find multifamily if you found it, and that has kind of changed here, I think, for the good, for the
But
better.
I know the GSEs have reduced their down payment requirement for 3 to 4 unit, as long as it's one of the units is owner occupied, and I think that goes a long way. To help the manufactured housing. I think is going to be now what method of manufacturing is
About that
something to
in a
be
minute.
talked about,
Yeah.
but the manufactured housing is going to be that entry level first time home buyers really only option, I think, in future years, because you've got a low supply of home builders compared to maybe 15 years ago, and then because
Cost.
they're in demand, cost is up, now, and if they can go out and build a McMansion, why would they build a starter home that takes just as much work from a logistic standpoint to line up and then not get the
We're not
return.
making
So
money.
I think
Yeah,
it's
the
I think
return on that is.
manufactured housing is the future of first time home buyers.
I agree with that. I agree with that a lot. I think that we talked about this a little bit last week. The cost to build a median single family home is like $300,000. Well, it used to be that, people were buying their first home for less than that. That's not the upcharge on it. That's the
Uh,
cost of building it.
yeah,
Which seems a little bit crazy. I don't know. I always think of Indiana as one of those great places where you probably can buy something that's reasonably affordable now, but people think that of Minnesota too. And we've
yeah.
kind of strayed outside of that, except for in the city.
I
Um,
saw recently that Indiana was listed as, I think, the fourth most affordable state in the country, from a income versus housing expense ratio, which that's great. We're always kind of in a little bit of a bubble here in Indiana that we never see the huge peaks. So we're always, when there's these great, business peaks, so we're always looking over a little jealous. But then when you look over and see the valleys, we never hit those deep valleys either. So, we're a little bit of a bubble. It's not a bad place to be from a risk standpoint.
yeah, there is something to be said for stability, right? It's
Yeah.
like just kind of like staying in the middle of that one. Um,
And one thing on the the affordability side is the impact fees and things that communities are charging are really having an effect as well, because we've got our local Greater Indianapolis what is it? Let's see. No, Baggy. Builders Association of Greater Indianapolis has, they've got at least one lawsuit going with a local community that raised their park impact fees so much that it was really driving builders and developers away from the community. So they filed suit against them, saying that it was essentially a strategy of theirs to slow growth. And we'll see how that shakes out. But there's another community that's going through something similar where they were trying to double their park impact fees, and I know the Builders Association is dealing with them. So it's a lot more than just lumber and nails that are driving the cost up on houses.
Yeah. Number one, I'm in Minnesota and we have a very green community development environment, at least where I live, that they are required to put X number of amounts of green space in
Yeah,
every community that is developed. And I have never heard of a park impact fee.
yeah,
And
yeah,
I didn't even know such a thing existed, number
yeah.
one.
You put a shovel in the ground, and they expect the town expects a check for their to keep their parks up.
Wow.
Yeah,
Okay. Well, that's a new one for me. So that's my one that I learned for the week. But what we've seen here is, which may be the same strategy, right? Is permit costs,
yeah,
permitting costs going way up and thought of as a mechanism to slow things down so that the municipality can keep up with what is what is going on. So I suppose every community kind of has their own little way of dealing with some of those things that are happening. One of the things that I did want to get your feedback on today is I saw this article and I thought, oh no. And maybe that's not your reaction, but there are some states that tend to lead things in the United States here,
oh,
and
I know
then
you're, yeah,
and then they filter down to other places. And right now in California, so California has about 20 to 25% of the entire residential lending in the United States, or it has historically, I guess I would say. Um, there is a bill out there right now, AB 2930 is what it's called. And it basically gives consumers the right to opt out of automated underwriting tools.
yeah.
When I read that, I had like multiple questions. I had them written down for you. It's like, what a processing nightmare, I would have to think.
Well, oh yeah. I mean, you have to give them the opportunity to opt out, and then if they do, it's all a manual process. California has gotten to the point where they have these beautiful beaches and mountains and great weather, and they're just trying to find a way to keep people away. Like, hey, we've got enough people, just we don't need any more, so we're going to make things just a little bit more difficult than it has to be. But I learned, in reading through that, I learned a new term. You learned park impact fees today. I learned algorithmic discrimination.
Yep.
Uh, so yeah, if you're, they're, you try to take the human element out of things so that you're not susceptible to discrimination. And now we're being told that, well, the computers discriminate as well through their algorithms. I, I don't see how this is gonna go through. I know that the bill's out there. I can't imagine that people that really know the business are gonna, sit still and not speak up on this because, California and New York seem to really greatly influence what happens going forward with the rest of the country. The thought of this, spreading across different states is scary because one of the biggest issues we have is the cost of producing a loan.
Yeah.
This isn't going to help. This isn't
That
going to
was my
make it any
second
cheaper.
question for you, actually. It's like,
Yeah,
what does that do? I mean, assume it elevates the cost of getting a mortgage, and then, you know, people that opt out of what is efficient for the lender member, does that mean that they pay a higher fee somewhere? Because essentially,
it wouldn't be fair.
well, yeah,
I mean, it's just a bad bill. It's not going to work. They may put it in
so,
place, and hopefully not. But if they put it in place, I'm sure it'll be repealed shortly.
yeah, yeah. I mean, I just,
Because the same the same legislators that are putting this forward are going to come back and complain about the cost to the consumer for a mortgage loan. And you
mm,
point out, look, it's because we're trying to live up to all these rules and that you're putting in place. People that probably don't know that there's a T in mortgage.
well, yeah. Well, and the other thought that I had related to this is like, not that the agencies would rebel, but then you're not using their tools either, and they like it when people use the tools that it makes the process substantially easier when you use the tools that they want you to.
Yeah, yeah,
And does cut down. I mean, many of the tools that are out there that people have implemented within their process to save money are things that have an impact in that environment. So let's just
yeah. I mean,
that
where else are
safer.
they? Yeah, I mean, it's going backward, and that never seems to work.
Yeah, yeah.
I mean, maybe we should break out the carbon paper and
The what do I want to call it? Not trifold, but the try
yeah,
form that you had to did you
yeah,
have to stick it in the printer and it print you out three so you don't have to make a copy?
yeah,
uh, that was back in my early days of processing. I'll never forget that. If you had it misaligned, man, you had to start all over. It was such a waste of trees back then.
yeah,
For sure, for sure. The last thing that I really just kind of wanted to talk about very shortly for you, and it's kind of been, change in the industry and disruption in the industry has been in a number of different places, with like the proposed NAR situation going on. One of the articles I came across this week, and title has also been in the news, was
yeah,
related to title insurance. And is the title insurance or the title arena just kind of like prime to be disrupted? I think on the mortgage lending side of things, a lot of disruption has always happened, so people don't think that's abnormal. But in the title space, it's always been how it's been.
yeah, yeah. And it's what 60 years. It's been the same, the same basic
Exactly the
method,
same.
and
Yep.
um, I think the title industry has some opportunity to move forward, to advance in with technology and make things cheaper. It's I think I read in that article that 75% of transactions don't
Yes,
really need title insurance.
yes.
Um,
They have clean ownership
yeah.
and clean chain of title.
Yeah, yeah. So I mean, there's definite opportunities there, but I'm also, I just talked about the legislators that don't work in the industry, and don't know what they're doing making the rules. So it's really easy for me to sit here in, the mortgage shop and tell them how to do their business. I'm sure there's things we're missing, but I think there's a definite opportunity to bring the cost down, um, to make things more efficient, to make them more valuable. I mean, the error rate that you get in title searches is still too high. Yeah, I think just with the right technology and systems in place, they could really eliminate a lot of those errors.
Yeah. Eliminate errors, maybe bring costs down. Maybe you look at it from the perspective of, doing more for the titles that are not that 75%, right? The ones that
Yeah.
aren't clean, having a better process, and spending your time more on the ones that really need it versus all of them, um,
Yeah.
in general, which I think is what a lot of the lenders have done on their business. It's like really clean files and things that are, maybe a little bit more vanilla, although there aren't a lot of them right now, I don't think.
No,
Um,
I don't remember the last one we got that didn't have some sort of quirk to it.
yeah. But going through the process a little bit smoother, than some of the other ones, and then having your team spend their time and resources on the ones that need more help, which right now is probably pretty much all of them.
Yeah, yeah. I mean, title fees and title insurance are easily the highest expense that we have in the process, highest single expense that we have in the process, and I think there's definite opportunity for advancement. Looking through some articles, they kept referencing, I forget the name of the system. It was, but the Australian system that, it,
Coleman's.
yeah, yeah, and it basically almost sounded to me like a similar system to MERS, where it's a national registry for land ownership, and you know, instead of each county and each state having their own methods and ways of doing things, you nationalize it and put a online system in place where you can go out, search, see if you need title insurance on it. If not, maybe you get an authorization that you're good to go and cut the costs on for that customer.
Yeah. Yep. Absolutely. Absolutely. We're out of time. It
But I'm
almost
just getting started.
we could probably, the two of us could probably talk for hours. I so appreciate you. It's always so much fun for me when you're on here. We love it when you are. You participated in some of our advocacy things. And so thank you.
Yeah,
Do
no
you
problem. I'll show my wife this video to show her that somebody appreciates me out there.
She's going to come back and ask for more time from you. I have a funny feeling if that's where you're spending your time, I want more of it.
Yeah.
Well, thank you, Bryan. Thank you, everyone, for joining us today. Come back next week at the same time, and chat with us about things that are going on in the industry. Appreciate you a lot, Bryan. Hope to see you soon.
All right. Thank you, Faith.
Bye.